We are live.
Brilliant. Well, thanks for joining, everybody. Thank you, Mark, for giving up some of your evening. So we've got Mark with us from Me Financial Services. We work with Mark on a business relationship with mortgage and financial advice. So you're in good hands this evening. So today we wanted to talk about the new release of the 95% government-backed mortgage scheme. And we wanted to cover off a few points because we're getting a lot of questions from purchasers, and rightfully so. And just try and make it easy for everyone to understand exactly what it is, how it can benefit you, what you need to be aware of before jumping into a deal. So yeah, we work our way through those, I suppose. So again, welcome, Mark. Thank you very much for joining us and giving up your evening. I know you've got kids at home. I'm sure you're very glad to be in the office still.
An excuse to get away. I'm just joking.
Ooh.
We lost Andy.
I think we've already lost Andy. It's gone quite well. We're 1 minute in. We seem to have lost him.
Well, I think Andy was going to ask me a question, probably something along the lines of what is the scheme? So
I'll step in for Andy at this moment. What is a 95% mortgage scheme then, Mark? Let's go through the basics. What are we talking about?
So basically what this is it's the government's released a new scheme to help buyers with a small or a deposit between 5 to 9%, so below the 10% deposit, so from as little as a 5% deposit to get on the ladder. This was around a little while ago when Help to Buy was first launched a long time ago, but they've relaunched it now because they've highlighted that there's a particular market where first-time buyers perhaps, or people with smaller deposits are going to struggle to get on the ladder, and that's the whole point of it. So a couple of things to bear in mind. So you've got the, as I said, the minimum deposit of 5%, £600,000 maximum property.
That nationwide? So a separate one for London, like there was Help to Buy. Okay.
That's right. Yeah. I think they thought, well, it covers it. Obviously, they've changed the Help to Buy scheme slightly now, where they've put some caps on geographically, but that's how it works. And a lot of people get confused. So some of the inquiries we're having at the moment, people getting a bit confused with, do I get a loan from the government? How does this work? The scheme, from a borrower's point of view, there's nothing that would change from your perspective. So if you had a 5% deposit, so if you had a £10,000 deposit to buy a £200,000 property, for argument's sake, there's no extra loans or anything like that you need to pay back to the government or another provider. What this scheme is all about is the government taking away or guaranteeing some of the risk where the lender's concerned. So it's a nice complicated way that works, but putting it simply, how that means is that they're guaranteeing some of the debt to make sure that lenders are more comfortable to lend with a smaller deposit. Okay.
And how does that, I mean, a lot of people who have been watching us on our live streams before will have heard of Help to Buy. There's been a lot about that in the market. What's the fundamental differences between this and that? Because to someone who's new, to them, they might just say, oh, I need 5% deposit. What's the fundamental differences there?
Yeah, so Help to Buy, you're restricted on a new build property. So you have to have a new build property. The way the Help to Buy would work is you would get a lump. So you would have up to 20% deposit that the government will actually give you. You wouldn't pay interest on it for a period of time. Then you start paying a fee for that borrowing after, say, a 5-year period. So you're effectively still borrowing the money, but the government's topping you up, I suppose, to cover that shortfall. And it is for new build properties only, where this scheme, I suppose, it gives the borrower a little bit more flexibility in the sort of properties they can look at. So you don't have to look at a new build property, but you also don't have to be a first-time buyer either. So if you have got a property that you're selling and you're moving, or you've had a property before and you want to buy another property now, it's available for anybody on a residential property that they're going to be buying to live in, not second homes or buy-to-let. That's fundamentally where it's different.
Right. Okay. I mean, it all sounds quite good. Obviously, we've discussed some of the pros. Are there any other pros to it? And then I suppose following on from that, what are the cons, if any?
Yeah, so the way we look at it, this is very new, but the way we look at it is the interest rate's the biggest con, I suppose, and that sounds like it's nothing.
Not a con as in like con man, as in
should have chosen a different.
Yeah.
Should have chosen a different phrase. But the downside is the interest rate. Like any mortgage, the smaller amount of deposit you put in, the higher the interest rate's likely to be with the loan, because there's more risk potentially for the lender. So they're not on the it's the most expensive in terms of interest rate that you can find. But then again, a lot of our clients are coming to us saying that they're paying £1,200 a month in rent, or they're living at home and they want to get on the ladder. It is an option to get on the ladder. Saying that, generally speaking, if you're putting down a 5% deposit, I've got a couple of examples. So the interest rate runs from anywhere from around 3.5% to about 4.2%, but they're normally more in the high threes to low fours. I think we've got Andy back now. So
here he is. It's all right, Andy. I covered
we are
for
live. You. I knew we were in good hands.
We were panicking, Andy.
Are we done?
Get sorted. We don't need you, mate. You can crack on. No, Mark was just kindly. We discussed some of the pros. We were asking about if there's any downsides to it, any cons, and Mark was just discussing interest rates.
Yeah. So the interest rate would be quite simply, it'll be higher than if you had a 25% deposit, but 25% deposit not everyone's got. So interest rate, we were saying, Andy, is anywhere from say 3.5 to probably the lower end of the scale, but you're probably more in the ballpark of 3.8 to 4.2-ish. 4 is a good number to base it on. On our website, we've got quite a handy borrowing calculator, and I've run some figures through now. So if you were looking at a £20,000, sorry, 20,000, that'd be nice, wouldn't it? If you were looking at a £200,000 property with a 10% deposit, with that would be a mortgage of 190,000. At say 4% over 30 years, that would be around £907 a month. So the interest rate is high, also certainly higher than what else is out there, but a lot of people paying rents at £1,000 to £1,200 a month would still find that affordable and would still prefer that as an option rather than renting.
Yeah. And I think it's got to be seen as an initial launch onto the market, onto the property ladder.
Yeah.
In 3-5 year time, hopefully you've got a bit more capital in your property or equity. You can then remortgage onto a 90% or a 75% if you're very lucky, or 80% mortgage. And then the rates will, I assume, if it was in today's market, would drop considerably.
Yeah. If you the main difference is if you compared now to a 5% and a 10% deposit, you're probably looking at about 0.5% to up to 0.75% potentially cheaper. So a lot of clients, depending on what their priorities are, we'll narrow it down with them and work out what their long-term plans are. But they may think, well, actually, we're going to do a new bathroom, we're going to get a new garden, get the garden sorted out or anything like that. What they'll probably do is they'll hopefully add some value to it, and they'll hopefully have a bit more equity in the property when they come to remortgage and get a better deal. So yeah, it's a foot on the ladder.
And as an example, Mark, what does that mean in monthly monetary value? So if you were saying these are on average 4% deals, but a 10% or a 90% mortgage is around 3%, let's say. If you do that same calculation, what difference does it make to the monthly instalments?
So just as a rough guide, if you're still looking at say a £200,000 house, so I said a £200,000 house with £190,000 mortgage would be around £907 a month over 30 years. So if you had an extra 5% deposit, you'd be looking at 180,000. Hopefully my maths would be right there.
You'd hope so.
Yeah. Let's just say the interest rate was slightly lower, so you'd be borrowing less, so the amount you're paying back on the loan is lower,
of course,
and the interest rate's lower. So at 90%, you'd be looking at £808 a month for that similar purchase price. So
it's about £100 a month difference.
Yeah, potentially. So as you know, a lot of this, say take a first-time buyer, for example. A first-time buyer may have a deposit from a family member or a parent, plus the bit that they've saved up as well. sometimes you may get a little bit of an extra deposit from your family to get you up to that 10%, and that will certainly lower your monthly payments and perhaps make things a little bit easier for you as well.
Yeah.
The other thing to consider as well, I wouldn't necessarily call it a downside because everything has its place, but a larger deposit generally allows you to have more flexibility with a lender that could potentially lend you more as well. So a smaller deposit, you may be looking at anywhere in the range of, say, 4 to 4.5 times your income. And that could be a joint income. Obviously, different incomes could be considered, which will be a conversation that we would have with somebody coming to work with us.
Right.
But anywhere in the sort of 4.5% bracket, you'll be down the lower end of the scale in terms of what you can borrow. Whereas and why that is some lenders will put a cap on because there's less equity in the property. Now, I would like to think that as the dust settles a bit with this new scheme coming out, that might change and lenders will be a bit more comfortable and things like that. But at this moment in time, that's one potential thing that we'll be talking to with our clients as well. The other thing is just generally speaking, we all know, I think we did a chat before about credit scoring and things like that. A lender may score you slightly harder, and if you've got any sort of adverse whatsoever, it's not going to do you any favours with a smaller deposit, so it's more difficult to get the mortgage potentially as well. We will always require a site of a credit report. We'll help you do that if you need some help with that, and then we'll just look through it to make sure it's where we would expect to be. And if we thought it was going to be anything that we'd have to raise, we'd perhaps talk about what we can do to get around that as well, and just consider that. But yeah, if you've got any missed payments or any sort of credit card issues or anything like that, you really need to be squeaky clean.
Squeaky clean, yeah.
Squeaky clean is the word. So in order to sort of have these 5% deposits. Now,
ultimately, it's a higher risk product for a lender, or they view it as. So they're going to be very, very stringent on who they lend to, and rightfully so. I think that's sensible lending in a way, isn't it? Which is part of the problem we had many moons ago. Jack, obviously, I'm not sure where we picked up, given I completely dropped out the call. But did you mention that people can drop questions in during?
No, it's good. We've got 10 people watching now, so if you do have any questions, just pop them in the comments. Mark and Andy and I are here to answer them. So
brilliant. Did we get through sort of what is it? So obviously, it's a bit of a new initiative in that the government are actually backing the scheme. And did we sort of describe on what that is and how that works yet?
Yeah, we did. I'll cover it off again because we might have other people joining, and I'm sure Andy, you might learn something. I don't know.
Absolutely.
but I was explaining it. I think the important thing to remember is people might go, oh, there's another type scheme that the government's bringing out, like the Help to Buy. And the Help to Buy, as you know, it involves you having a equity loan from the government that you're responsible for later down the line. This scenario, the guarantee isn't to you as the borrower. The guarantee is to the government, to the lender. So the government are basically saying to the lender, look, do us a favour, lend people with a smaller deposit, please. Lend to people with a smaller deposit, please, and we will cover you for that added risk.
Almost act as a guarantor. Would that be a good way to describe it?
Guarantor scheme or guarantee scheme. Yeah, exactly. Yeah, exactly right. So that's how they work. So there's a lot of calculations in terms of how that works and everything like that, but there's no point going into it.
I think it's important to define that it's different from Help to Buy, which, like you said, is very much an equity loan you're taking from the government. This is no equity input from government. You don't owe anybody any of the money. The government are almost backing you as a guarantor to make sure you don't default on your mortgage.
A help to buy is the government helping you buy. A mortgage guarantee is helping a lender to lend, and that's the way to look at it. It's, that's the way it's
okay. And who's it aimed at? Is it all buyers, as in first, second-time movers, or is it just purely for first-time buyers?
First-time buyers and movers, no second homes or buy-to-let.
Okay, perfect. So it's not an investment product, definitely. Types of properties, there's been some rumours around the market that flats and apartments won't be included. I know some of the earlier offerings were, and also new build, if we could clarify that.
Yeah, so flats and things, flats and apartments. So lenders traditionally will have a different appetite with flats and apartments, so they may require more deposit naturally. But yeah, there may be a restriction on flats and apartments for this scheme, so the 5%. Certainly new build properties. I'll be happily told wrong, but I don't think there's anyone quite yet that's jumped on that at 95%. But that may very well change. As I said, it's only really launched on the 19th.
Yeah, and I suppose actually there is a scheme already in place with the Help to Buy. Again, different product, but that is tailored towards the new build and the new homes market. So it's possibly why a lot of lenders aren't going there as well.
Yeah. I mean, Help to Buy. New builds are great, but sometimes people just want to buy a traditional house, and I think there was that gap there that this is hopefully going to plug. So
yeah, okay, and have we talked about how long the product is in terms of it's a fixed term, I assume, for 4 or 5 years? Did I hear most of them?
Yeah. 5 years is fairly standard, and there are 2-year options. And as I said, that range that I gave you of 3.5 to 4.2. Generally speaking, if you have a longer fixed rate term, okay, the rate will be slightly higher, but then you've got that peace of mind for a longer period of time. Interest rates are all-time low at the moment, so there might be a lot of people may take some comfort from the fact that their rate's not going to change. Obviously, it's their first house; they're getting used to paying bills and stuff like that for a lot of people as well. So, that comfort sort of built in as well. Generally, a 2-year fix is available there. There are a couple of 2 years. I've just got it on the screen there. But there are a couple of 2 years. But a lot of
what sort of fees can buyers expect in terms of arrangement fees, setup costs, survey fees?
Yeah, so all the normal stuff really. So we will go through what your priority is. So generally speaking, lenders will either charge a fee, and there'll be let's say it's an arrangement fee. So they'll charge an arrangement fee, and there'll be a slightly lower interest rate, or they won't charge a fee, and the interest rate may be slightly higher. And our job working with our customers we would work out, is it worth you paying a fee or not paying a fee based on what you're looking to do. Ultimately, the main problem with the 95% is a lot of people like to add those fees on, and you wouldn't be able to do that in most cases on the 95%. So that might be a factor as well. If you've got a small deposit, like a 5% deposit, and you haven't factored in for fees and things, and you were hoping to add that, that's something that you may think about when we're giving you the advice as well. So there are products out there that have no fees. Generally speaking, the highest fees are around a 999. For first-time buyers, and actually a lot of lenders may also have this as well, and we'll have to have a proper look, and I'll test my knowledge myself later. But some lenders will throw in incentives like free valuations and things like that as well. So to cover off the fees of buying any house, you'd have an arrangement fee with the lender potentially, which will be anything from 0 to 1,000. You'll have a valuation fee. A basic mortgage valuation is the minimum that you're going to need, which will be anything from 0 to maybe 250 to 350. You may want a more comprehensive valuation. So if you're buying a fairly old property, or you think actually I'd rather know what I'm buying is giving me good value for money, you might pay for a more comprehensive valuation. That could be anywhere from £500 to £800 maybe. It's all based on the bigger the property you buy, the more it costs to value it basically. But in this sort of range, that's what you're looking at. And you have your solicitor's fees and your conveyancing fees, and a £200,000 property, depending on what you buy, 1,200 to 1,800. I'm giving a massive broad range there because I don't commit myself to anything.
With all disbursements, I think you're probably on the right lines there.
Yeah. And if you go to a broker that charges a fee or not charges a fee, that's a conversation we'll have further down the line as well. Or you may just go to your bank directly or whatever. So I would normally suggest you keep back about 5,000, maybe 3,000 if you can, for costs and things, just to cover everything. And also you might want to buy yourself a nice flashy plasma screen or something when you get a well-used sofa and all that sort of stuff too. So you've got to factor all those important things in, which are much more interesting than mortgages.
Definitely. Okay, cool. I suppose just to summarise then, so it's a government-backed scheme where it's not an equity loan. Just to be clear on that, the government are almost guarantoring you as an individual, so that the lenders have a bit more comfort in offering these products to the market, which were previously withdrawn. They're for first-time buyers and home movers, but not for investment purpose or an investment vehicle. A lot of them at the moment aren't offering it at or for new homes, and there's some restrictions on apartments and flats. I think that's possibly to do with ground rent and cladding issues, which we won't digress into right now. And they range anything from 2-year to 5-year fixed terms. So depending on how much comfort you want and what your plans are and what your aspirations are. Okay, cool. And where can people find you, Mark, if they want a bit more information?
So just a little bit about us. So we are I'd say small but growing mortgage company, and we do lots of different services, which are all behind us there. Mortgage insurance. We also do equity release as well. So we've got a lot of bases.
Never knew you were so flexible, Mark.
Yeah, I won't do that again. My shirt will rip. But yeah, we've got our head office. Well, our office is in Hall Green, but we've recently moved to Regis in Solihull. But we've got a broker, John, in the Cotswolds. That's as far as we'll probably go. We've got another broker in Lutterworth, another broker sort of in this area as well, and sort of Walsall sort of way, they're going to really kick my butt now because I've completely gone blank where everybody else is. But basically around
put you on the spot. There's a plethora of advisors you can choose from, all through Me Financial Services.
Exactly.
Headed up by yourself, Mark.
Everywhere. We're all on Zoom. We're all on. You can be face to face in gardens or whatever, but we're all on Zoom. Our system's quite straightforward.
And I think that's the world now, isn't it? To make a mortgage application and have a real thorough, in-depth meeting. You can do it as we are now from the comfort of your own home. And Mark works 24/7, 7 days a week.
Hopefully with better internet connection than you, Andy.
Possibly, yeah. I'm really not sure what happened there, but hey, cool.
I mean, okay. I was just going to interject at one point, guys. We did have a question from Christina asking about if it was available to all kind of residential properties, but as that pinged up, you sort of started down that route anyway. But as we say, if anyone's got any other questions now, do ping them on. There's a good few people watching. So if there's anything mortgage related at all or financial advisory that Mark can help with, I'm sure he'd be happy to help now.
Yeah. And what we'll do, we'll obviously repost this as a recorded video. We'll tag Mark into it as well. So you can find Mark at Me Financial Direct. And look, if you want to get in touch with him and want to come through us, we're more than happy to put you in touch with Mark anytime. So if there's nothing else, I think we'll let you enjoy your evening, Mark. Thank you very much for your time. Appreciate it. And as I say, any questions on the mortgage market, guys, do get in touch.
Brilliant.
Cheers. Take care, everyone. Have a good evening.
Cheers. Bye.